Hi friends, welcome back. So we have a lot of green in the stock market today. Want to go over the stories. Essentially, it's about the consumer and what's going on there. And if you want to take a look at the around the world, we also got some green going on. Also, the headline of the day is strong U.S. retail sales raise hopes of soft landing. So the question in everyone's mind is, can we avoid a recession? Can we not hit that hard landing, go for soft landing? And essentially, the idea is that consumers are still showing up. This is coming from Edward Jones. They say here regarding Thursday's retail sales figures, quote, help to alleviate or assuage any fears that the U.S. economy is falling into an imminent recession. Now, remember, reason why you want to talk about consumers, they make up about 2/3 of the economy. And if they're not buying, companies aren't making money, right? And so that's essentially what you need. They also say here regarding retail and labor market, really help support the soft landing narrative. The consumer may be cooling, but not collapsing. Now, I want to give you a couple of different perspectives on this, and then I'll share my opinion because we're also watching, what are people saying about the rate cuts, etc. Here's another person's point of view. Yesterday, I was 50-50 on whether the Fed was going to cut rates by 25 basis points or 50 basis points, right? I'm talking about September here. And this is coming from Harvest Volatility Management. And they say here, today I'm 75 to 25 that they'll only cut 25 basis points. So they also say here, we are not on the verge of recession, which is what we all feared 2 weeks ago. And it's kind of crazy like how quickly things turn around. Now, the thing is, though, I do want to caution you guys with any of these things because it is volatile. Like literally the person just said 2 weeks ago, we were all worried about recession. Now look at this great consumer retail sales. Look how awesome everything are. The one thing that I was thinking about is how much of this is bought on credit, though, right? How long can this party last? And one of the things that someone mentioned is that Amazon Prime sale was during this period, so that might have boosted sales a bit. You can also take a look at this. This is sort of where we were. So it was near, I think, like 1% retail sales was up. And then that was the expected was like 0.3. So it was much higher than what people were expecting. You can see here, though, it is up and down, up and down, up and down. So don't necessarily think that we're going to stay like this forever. Moreover, the one thing I want to mention, too, as well, is you can take a look at this. This is says there's steadfast U.S. consumer job market allies concerned about the economy. The basic gist of it is they're saying, hey, jobless claims came in lower than expected. However, I want to point this out because we talked about it before just yesterday, is regardless of what the national numbers say, your individual situation may be different, right? So for example, Cisco is, they're cutting 7% of their workforce. That is a pretty significant amount. And we've talked about other big companies firing as well. So, if you're part of this 7% that just lost their job, you're just like, well, I don't know what you're talking about. I'm not out shopping like crazy, right? Because I'm kind of concerned about my own situation. And the sort of dilemma that we're facing is companies are like, okay, we need to raise profits in order to make more money, to make and keep Wall Street happy. So one way we can do that if sales are slowing is that we can cut our workforce. Now, when we talk about retail sales increasing, some of the stores like it's going to be a shift. Not all of the money is going to go into any particular company. So like for example, not all the money is going to go to Cisco. Their sales were down 10%, but then sales were up at Walmart, right? Because Walmart is essentially people are trading down to get lower prices. That's why you go to Walmart. The thing is, though, I think with the Walmart situation or even Target, or you'll find out with the home builders as well, it's kind of a theme I noticed today, is they're saying in order to get people through the door, they have to cut prices. So sales may be up, but will profits also be there with the various companies who report going into next quarter? That's sort of what we're looking at. This is a quote here, another one. Consumers have become more discerning with their spending as they continue to face higher prices and borrowing costs, right? So prices are still elevated. So we're not just going to go out and buy everything. It's still, to put stuff on your credit card or get a mortgage, auto loan, et cetera, is still high, the borrowing costs. So again, you're not going to be buying everything. But the latest retail sales data show a continuing willingness to spend. So people are still buying. And that's sort of why you look at consumer sentiment, right? Meaning that how are people feeling about the future? So, today everyone's celebrating, hey, look at, consumer data was up this past month. But, this is just a month-to-month change. Who knows what could happen next month? Here's another quote here. We expect increased spending prudence, right? People are still going to be careful in the coming quarters, though we do not foresee a consumer retrenchment, right? So This is something I want to point out as well. And I was thinking about this in terms of like how much of this is on debt. This just came out a couple weeks ago. Average American debt in 2024. And you guys can compare, your situation to the average American. So a lot of the debt that people carry is mortgage debt, right? So the average balance is 244,000. And then some people, they're getting a home equity line of credits to sort of take advantage of that equity built in the house, which, you guys do you. I'm not a big proponent of this kind of stuff, but I do understand why people would do it. If the idea is like, hey, maybe I have a whole bunch of like high credit card debt at higher rates, and I can get in and use my HELOC to like pay off that stuff, using a home equity, but you're still borrowing from the future, which I don't necessarily, like I said, I don't necessarily a big advocate of that, but it's not awful as long as you don't lose your job, because you are putting your house online. So be careful with that kind of stuff. Auto loan, average balance is 23,000. Credit card debt, 6,500. This is again the average balance. Student debt is 38,000. So total debt, so the average person maybe about 100, something like that. Also, too, take a look at this. This is interesting one. This is by age, and I like to show you guys this stuff because yes, we talk about the markets, right? We want to track what people are doing, what the markets are doing, etc. But I also want to talk about just being financially healthy, and this sort of shows you where people are. When in doubt, throw money into index funds. You're going to be relatively safe there. Throw money into bonds. You're going to be safe there. Pay off your debts. That's never a bad idea, right? You want to doing all these things and make sure your job is secure by having current job skills and good relationships around your industry and these kind of things, or just with everybody, not just your industry. But this is the average debt regarding generation. So Gen Z average debt is around 29, 30,000. For millennials, average debt's around 125,000. Gen X, about 157,000, right? Is the average debt. Baby boomer, 94,000, and silent generations, that would be people who are older, around 38,000. So it's interesting because you can actually see how the debt levels of all the groups, actually the younger groups, the debt levels went up, then baby boomers and silent debt levels actually went down. You can see this stuff here. That was just from 2022 to 2023. The other thing that's really interesting about this stuff is it depends on your credit score. And, for those of you who are watching around the world, you guys can chime in. I know the American system's going to be different than other systems about how much, debt Americans carry compared to, say, Australia or New Zealand or, Germany or UK. I don't know. I don't know your debt levels in those countries, but I'm just saying it's going to be different around the world. But what's fascinating about this is that the higher your credit, the more debt you take on, because essentially they lend you more. And then this is sort of how the game is played. One of the things that people were talking about in the comments, I think it was a couple of videos ago, saying, I'm sick of how our system is all based on debt and lending people money, because that's the system. That's our modern economic system. The basic idea is that I lend you money so you can buy a house. I lend you money so you can buy a car. I lend you money so you can get an education. All of these things. The issue is that there comes a point to where, like, are we over borrowing to where the whole thing collapses, right? What if things slow down and people stop buying? And that's essentially why you look at stuff today where, like, hey, people are still buying. Things are still looking up okay as long as we keep people buying. The issue though is this, like, how long can this go? And I was looking at this, the amount of debt that people carry in terms of like total household debt just goes up. It's like it just goes up. It doesn't really come down. It says here, household debt grows at a slower pace while caution is still warranted, meaning that it may slow in the amount that we grow our household debt, but it just still goes up. Household debt rose by over 100 billion in the second quarter among Americans overall, moderating slightly from the first quarter's increase. But it says here, but consumers are becoming delinquent at a faster rate, indicating that they're feeling the sting from tighter economic conditions. Total household debt increased by 109 billion, or 0.6%, in the second quarter of 2024. Take a look at this. This is the delinquency, and I noticed that this is dated August 6th, so just a few weeks ago, or actually 10 days ago, but a few weeks ago. And you can see the delinquencies are ticking up a bit. And moreover, I've been saying this over and over again, to where, like, guys, you just want to be financially healthy. So I know a lot of channels out there to say, you're going to make oodles of cash in the market, and you can make money in the market, right? But it's not necessarily guaranteed. All right, so that's why you put your eggs in different baskets. And moreover, if you are going to play the market, don't necessarily put all your eggs in one particular company. It works when it works, but when it doesn't work out well, right? So you want to always be hedging your bets. Because I look at this kind of stuff and I'm just thinking, okay, this is sort of the culture that we're pushing to people is like leverage as much as you can, borrow as much as you can, get that American dream, etc. And then we're celebrating when people are spending more money. And like from my point of view, from just giving you just reasonable advice is, hey, I have no trouble, guys, if you guys are out buying things. I got no trouble with that. But the issue is like how are you buying said things, and what are going on in other facets of your life? Are you building up assets to ensure your wealth in the future? So that's the kind of stuff I would like to talk with you guys about. One of the things that I just made a video just recently where Kamala Harris is saying, hey, I'm going to try to fight inflation by bringing food prices down, etc. Trump's saying, hey, I'm going to bring down inflation by trying to lower energy prices by drilling more. The hard thing though is that from my understanding as of now, neither politician's like, yo, I'm going to try to get housing costs down. And this is the tricky one, because we looked at the last CPI data, and again, we're talking about health and consumer. It was like 70 to 90%, depending on what numbers you look at, but a large portion of inflation is housing costs. And so this was an interesting article that just came out. It says 1/3 of home builders are slashing prices as confidence in the market falls to 8-month low. And I just keep seeing this theme. Home builders need you to buy homes, so they try to give you incentives, cut prices. Car dealers, say like your Tesla, they try to get you to buy cars, so they're cutting prices. Walmart, Target are doing the same kind of things, and the retail sales may be there, but to get you through the door, the companies are essentially eating their margins up. So this is where I'm not sure if necessarily, because I know what they're going to say on TV and Wall Street. I know what they're going to say. They're going to say, oh, we're doing great. We're doing great. Next bull market. They always say that, of course. And I just say, just be cautious, right? It doesn't mean it's not going to go up, but I do try to look at everything, so I'm not like blindsided by stuff. I was looking at this home stuff, and it was interesting to see what people say about this, because you guys know this. Homes are expensive. Who doesn't know that? And you want to rate that to the median income, and then compare that to the median price of home. So general ballpark figures, I think last time we've been checking in the USA, I think it's maybe in around the 7 to 8 times, meaning that whatever the median income is right now, the home price is about 7 to 8 times that. But it's going to depend on which country. And so the higher end would be like crazy, expensive cities, say like a Beijing, Tokyo, maybe like 20 times, something like that. Australia, prices can be like 16 times. So US is relatively inexpensive compared to other places around the world, but it also depends which market you are in USA. So let's read about this though. So one of the ways you would bring house prices down is to have more houses on the market, right? More supply. This is here. Builder confidence fell for the 4th month in a row in August as elevated mortgage rates continue to spook home buyers. Sentiment among home builders is the lowest since December 2023. Lack of sales stemming from buyers sitting on the sidelines, right? So buyers are like, I'm not buying due to home prices, right? Too high. And mortgage rates pushed to the National Association of Home Builders Monthly Confidence Index. So I think mortgage, I think the average ones are like 6.5-ish, in that range, something like that. Depends on, are there enough people out there willing to sell? Because I know there's still a lot of people that are sitting at like 2%, 3% mortgage, and they're like, I'm not selling, I'm not going anywhere because I don't want to pick up a higher rate mortgage. And so this is the issue that you're facing, right? You need to build more houses to get more people out, because even if like you say can qualify for a loan, and you're like, okay, and I'm going to take that 6.5%, and then you look around the market and you're like, well, home prices are too high. Or even if, let's say, they're not too high for you, you can't necessarily find what you want. So that's why we're talking about home builders here. Here's another quote here. It says, budgets are typically the most important factor for buyers, and homes are still really expensive for a lot of people. A lot of buyers are waiting to see if mortgage rates fall more when the Fed cuts rates, right? So the rumor is cutting in September. So, if you're in the market, you're probably just going to wait. And to see what happens with the economy and the election later this year. And then usually, the winter months, people are less likely to move, et cetera. So you may see a slowdown also with that. So you have the election, and this, if if you're thinking the Fed's going to cut, you're waiting for the results of the election. You're looking at the seasonal. It's winter. Just wait till February perhaps. Another person quote says here, with the current inflation data pointing to interest rate cuts from the Federal Reserve, mortgage rates down markedly in the second week of August, buyer interest and home builder sentiment should improve in the months ahead, right? So talking about the future. The only sustainable way to effectively tame housing costs is to implement policies that allow builders to construct more attainable and affordable housing. But my other understanding of the housing market, as well as we're talking about home builders' point of view, is they actually make more profits from building like your bigger and luxury homes kind of thing. Not just luxury, but just let's say bigger homes. The issue becomes then is that like, okay, are there enough sort of starter homes on the market? And the home builders aren't really incentivized to build that kind of home. So that's always a big problem for new people in the market. However, I do want to talk about a couple other things as well, is that prices are coming down in some things. So this is the interesting chart that CNBC just put out. It says deflation, right? So where are things coming down? Yesterday we talked about where things are still going up, and this is year over year. So apples evidently are down from last year. I'll just say here in Korea, apples are still expensive. Maybe not at the peak. So I don't know if we're down 14.5%. I'll just say apples are still expensive, but for us, it also depends on season, because the red apples tend to cost more than the green apples, but it depends. Potatoes are down a bit. Rice is also down at negative 3.7%. This is actually a big one in Asia, the price of rice. So we consume so much rice that matters quite a lot. Ham is actually down. That's interesting because we looked at, was it yesterday? I think beef is still up, and I can't remember if chicken was up or not. I know eggs were up, but ham is down. Other uncooked poultry down 2.3%. Cheese is down a bit. Fresh fish and seafood is down a negative 2.1%. Roasted coffee down 1.6%. That's interesting because I read a report. They were saying that expect coffee prices to go up. So I'm not sure how long this one will last. And then it says white bread down negative 1.4%, and then gasoline unleaded down at negative 2.3%. Other things that are going down in price, men's suits. So if you're in the market for that, I was thinking that might have to do with demand, perhaps. If we're all working from home, there's no reason to go out and buy a suit. Why would you, right? You just wear a button shirt, or you just have one jacket. I guess you get the wrong, but you're not going in the office as much. Used cars and trucks are down. Also have car and truck rentals are also down in price. There was a time when it was really expensive to rent a car. I remember that. Televisions are down negative 5.4%. Furniture and bedding down a negative 5.2%. And actually, the furniture bedding thing, that represents the home market, right? So are people buying new couches and stuff like that? And TVs, I told you guys this stuff before. Sometimes when inflation's cooling, it may be cooling in like TVs, but it's not like you buy a TV every day. So this is where the housing and the food costs become important, right? Because that's the stuff that you do every day. One thing I wanted to point out as well, which is kind of interesting, they keep bringing up this new Starbucks CEO because more details keep coming out about it. And I'll say this: it's nice work if you can get it. So I guess they're gonna be paying him. The pay package he's getting is like worth 113 million. I think they're giving him some cash ahead of time and then a bunch of options. But one of the interesting things about the deal that he got, and remember, this was the CEO of Chipotle, and he moved over to Starbucks, is they're saying, hey, you can actually work remotely. So the Starbucks headquarters is in Seattle, but they're going to let him stay basically in the LA, Orange County area, so Southern California, Newport Beach. So that's a nice area. And that's a pretty sweet deal, actually. Work remotely, get a very, very high level of pay, and you don't necessarily have to change your lifestyle because he's probably upgrading his lifestyle. Actually, I think he's getting paid like 5 times more than he was at Chipotle, something like that. And I'm bringing that up because it was interesting. I was looking at this here. If you can compare, the Elon Musk pay package, it was at 56 billion. Compared to the Starbucks guy now, so the new Starbucks CEO, and he's getting like 113 million. This is a year, so if you want to look at Musk, I don't know, say he's been there 10 years or whatever, so that's like 5 billion a year, and this guy's getting like 113 million. It's a major difference. And for some people to say, well, Chris, you don't understand. I mean, Tesla is so awesome. Look how much money they make. Well, let's take a look at the numbers. So Tesla, I just you can do a quick Google Tesla yearly profits. You can see it is about 16 17.8, but we'll call it 17 billion a year in profits. That would be Tesla. On a good year for Tesla, so in 2022, they're making about 20 billion in profit, right? Look at Starbucks. This is the comparison. So I just wanted to illustrate like how crazy Musk's pay package is in comparison. Starbucks gross profit 2024 25 billion, and then that was and then 2023 25 billion, 2022 22 billion, so over 20 billion. So in the best year of say Tesla is still under what a Starbucks would profit, and that shows you the difference in pay salary. So that's what's there with that. Guys, I always appreciate you watching, and I like to show you this kind of stuff because I just want to say, hey, there is nice work out there if you can get it, but just do be careful because my personal opinion is sort of the way we see things going. I think that we're going to have a larger disparity of incomes. The other thing too I want to mention as well is in this channel we do talk about other countries because you do want to have a global perspective on this stuff. China's having a tough time over there still. The USA, we're celebrating, that Americans are still shopping. In China, that they're having a tough time getting people to go shopping. It's just a different culture, right? It was a similar situation in Japan as well. Korea, where I am, is closer to the Americans, where people are still more willing to shop. But everything depends on what's going on with your local economy. So in China, they're actually having home deflation. It's a big problem because much of Chinese people's wealth is tied into real estate, right? So if you see your essentially overall wealth shrinking, you're like, oh, that's not great. Or if you're over leveraged on your real estate, again, you're hurting. And so why am I bringing this stuff up is because even if the Americans are shopping, say this past month, the Chinese may not necessarily be shopping, right? So what does that matter? Well, if you're into Apple stock or you're into Tesla stock or whatever, stock, or even John Deere, for example, you still have to sell it to, people. And there's more than just the American market out there. So I think the U.S. market is still, I mean, the numbers show it is still fairly strong, but you can't ignore what's happening around the world. And also too, again, it always depends on what's happening in your individual neck of the woods. So I always like to hear you guys' thoughts on any one of these things. I hope I give you a pretty good perspective on this stuff and give you a more broader perspective, to sort of help you understand everything, not just a few things. And I do appreciate your time, and I'll catch you on the next video.